that would have from these Chinese capital outflows, if there's any correlation. So seeing that from 2015 peak, I think West Vancouver's dollar volumes, which is the total amount spent, dropped by 42%. So basically, like, the amount spent on the real estate in West Vancouver has basically virtually been slashed in half since really peaking in 2015. And of course, that aligns perfectly with China's capital outflows. So I think, those are markets obviously that are highly dependent on that. Vancouver's west side, I believe, is down by about 37% from the peak. So those are sort of some interesting numbers that I'm looking at. Obviously, it's nice to have the data to be able to do that. Couple things is, someone asked me the other day, am I seeing a slowdown in the condo market? And truthfully I said, no. I mean, right now there's still a lot of multiple offers. New listings tend to outpace sales in January. That's what we're seeing. I'm not seeing anything out of the norm, right? And the guy's like, now you're all of a sudden you're bullish on the market. It's not the case. The case, has always been, behind the videos and the blogs and the content, has been to provide an honest and transparent, objective analysis of the real estate market. I don't think it's out there. Obviously, when you have your salary dependent on it, or you're being paid by someone to push out that narrative, I think that there's automatically a bias ingrained. So my whole goal has been to sort of pull that out and just put it out there. I'll be the first to tell you when the condo market is slowing. Right now, I just don't see it. We're still at record low inventory levels. The stress test, yes, it just got implemented, but people don't realize it doesn't mean instant pandemonium, right? People have been pre-approved for up to 120 days. There was a huge surge of that. Speak with any mortgage broker, they were locking in pre-approvals in December. So those are 120 days out, right? That's why I said, when you're looking at that mortgage stress test, I would say you probably won't see the real sort of impact until probably late spring, early summer, until you really start to see that trickle through the system. Another way to do this is always, again, just looking for factual arguments, is looking at the Bank of Canada, which releases updated stats on credit growth, mortgage credit growth, to see if that is still growing. That'll be key metrics that you can be able to see how the market is digesting these new policy changes and how banks are starting to pull things in. So that'll be stuff to look for, right? And that's obviously something that I will come out and put out there for you. Other than that, there hasn't been a whole lot going on. World Economic Forum is just wrapping up. It's obviously where all the politicians, central bankers get together. There was a good interview with Stephen Pelosi, the Bank of Canada, basically arguing that cheap money is not behind us. Obviously, he admits that the Bank of Canada has essentially been pinned into a corner, obviously, with our debt overhang. You raise too quick, and that creates a disastrous deleveraging situation on households, which they actually warned Bill Morneau in a paper, I believe, about 6 months to a year ago, that they're going to begin a tightening cycle, and they assured him that the economy would stay resilient, but they warned him of a potential household deleveraging situation. So, it's very interesting because all this information is out there. The Bank of Canada, they all they publish these reports, and everything is in there. It's just nobody actually takes the time to go in and read them. That's pretty much it, right? I think you just live in interesting times. I made this, put this out there the other day, right? And people are obviously bearish on Vancouver real estate, and I think that people have a right to be so. Obviously, I think that the market is definitely frothy, but I look at it and go, what financial asset isn't right now? I think, the Dow Jones is at 26,000 record high. Bitcoin a month ago hit 19,000, and you have Vancouver condos selling at 1,200 a square foot. So I think all of that sort of plays into the markets. Pre-sales are now selling 20 to 30% above market value because developers are paying such a premium for the land. They have to basically charge this. So, and you're starting to see that, right? As that market could potentially slow down. I look at, there was an article in the newspaper the other day. It was in Whitby, Ontario, where these buyers had bought into phase 1, and now a year later, phase 2 is selling, and they're selling it for between $75,000 to $90,000 less than what phase one buyers bought it for. And of course, those buyers are upset. They're asking for rebates or refunds. And the developers saying, hey, listen, we'll give you up to $30,000 rebate if you up your deposit. So, you know, obviously those are something that you don't do in a strong market. But it's sort of I think it should be a reminder to people, right? Like, I mean, housing is still an investment, and investments don't just go one way, right? Like that's the risk that you take in a pre-sale. People that are buying in today at a 20 to 30% premium, you have to be very well aware of what are the potential negatives if I buy in and that property, you know, prices don't make up that 20 to 30% gain in the next 2 years, or even a worst case scenario is prices come down. You know, that obviously becomes, again, like I've said before, that becomes more difficult with financing, especially in being assigning those. What are the legal implications behind that? So I think that's a very interesting space to watch for. I know it's one that I'll be watching. I think this Whitby case is likely going to be the first of many, you know, particularly in Ontario, where we're starting to see quite a bit of slowdown there. So yeah, I hope that helped. Again, if you have any questions, comments, put that in below, and I'll see you next week.